one of the most important things in bull markets is when we retrace and we get back to the previous high, we don't stop there. We rip through that and go way higher, a lot more beyond people's imagination, purely because of all of the fear of missing out that everybody's gone through in the past 2 weeks.
Okay, I think we're live now.
Wait, what? Really?
Yeah, dude, we're live. I was wondering why
okay.
you're saying anything.
Okay.
Cool. So let's begin.
Okay. So we dive in. All of what we say is not financial advice, not legal advice. Yes, and for educational purposes, but we for sure might be holding investments and stocks that we say or speak about. Anyways, so this is signal and sentiment. Is that what we named it? Anyways, let's pretend that we can make some sense out of what we say. But point being, what we're here to talk about today is the fact that Trump's tariffs are not what everybody has been talking about. It is not as bad as all of you guys think. It is still a secular bull market. And the only reason it's a secular bull market is why we're going to be speaking about it. If you stay till the end of the video, you're going to realize, and maybe you're also going to agree with our point of view as to why the bull market is still here. And it's very likely that all three of us here agree that you are going to see new all-time highs on the S&P 500. You will most likely see more than 6,200 to 6,500, maybe even more. Because one of the most important things in bull markets is when we retrace and we get back to the previous high, we don't stop there. We rip through that and go way higher, a lot more beyond people's imagination, purely because of all of the fear of missing out that everybody's gone through in the past 2 weeks. So this is Nikhil. Say hello, Nikhil. And that's Sean.
Hello.
Say hello, Sean. Okay, guys. So let's get on with this before it's our 10th take. And let's figure out how do we convince the world as to what we're thinking is actually the way people should think. Anyways, we hope not to keep this for too long, maybe about 20 to 30 minutes. We have about, how many charts do we have? We have what? 7?
8 slides, maybe 7, 8 slides.
So we got 8 slides. So maybe we can give them a brief of what we think and then maybe go on as we speak. So the good part is that all three of us spoke maybe a few days back and we realized that the situation is not as grim as it looks. The larger reason being that in a bull market, on good news, you rally hard. On bad news, you still rally. What we saw day before yesterday, especially with the GDP data that came out, it was a lot worse than what people expected. It is a lot worse than people expected when the jobs numbers came out. A lot of us were expecting plus 100K when it was ADP. Non-farm payrolls blew through the roof. We're going to speak about that. We have a few charts on it also, I guess. But more importantly, what we focused on was all of this bad news. GDP data came in negative 0.4. We were all estimating a positive number, even though the Atlanta Fed came out and said that it would be a negative number. Negative 0.4, market crashes 2% on the S&P 500, 3% on the NASDAQ. By closing, we're in the green for all the indexes. Every time that happens, you must realize that whenever the S&P 500 is down 2% or the NASDAQ is down 3%, and you close in the green, it is highly likely that you are in a bull market. It is not possible that in a bear market with such bad data, you are going to turn into the green. You must realize that. It is the market's way of fooling you, believing that all the news that you see on Twitter, everything that you see on X or on Facebook or on all of these news channels is just trying to scare you from the concept that we're not in a bull market. At the end of the day, when someone's selling, someone's buying. And if you recover from a negative 3% on the NASDAQ or a negative 2% on the S&P 500 into positive territory, means people are buying more than what people are selling. There's more demand. That's clear here. Now, yes, you can believe that 125% by China on America, 145% by America on China, and on some products, 245% will literally crumble the world economy. But you also need to realize that what happened from April 2nd to April 9th, right? And that's something that Sean, me, and Nikhil are going to be pretty much speaking about today. That on April 2nd, All of us expected 10 to 15%, right? I guess that's what pretty much everyone around the world was expecting, a 10%, 15% tariff rate. We ended up with somewhere north of 30 to 35%. And that took the market by storm. And nobody was expecting the numbers to go up even above the 50%, right? I mean, a lot of us, including I think Sean and me, were pretty scared as to what would happen to the penguins on Lesotho, right? What happens when they get a 100% tariff, if they do. Anyways, at a point being, what we're looking at here is simply a process where we scared the market into triple digit tariffs. Now, on April 9th or April 8th, I remember the three of us also got on a call. And what we wondered on that day was, how bad can it get? And on the same day, Donald Trump comes out and tweets saying it's a great day, time to buy. Whatever it was a bullish tweet. And that was the first bullish news that we found in about 2 months, all the way from January 20th. I don't think we heard of anything. Did we hear of anything, Nikhil, in about 2 months?
No, I don't think so. But I think after the high on Feb 18th, which is basically the last high the market had, we didn't hear anything after that.
That was a good portfolio screenshot picture. February 8th.
Never going to see it for
Yeah. Maybe, but I truly do believe we might see it towards the end of the year, if not early. Right. So getting back to the larger scenario, that was the first bullish scenario that we found where we said, you know what we were waiting for was either Trump to pivot or the Fed to pivot. What we knew was the Fed's not going to pivot just because the stock market's in a free fall. The Fed's only going to pivot if you have a banking crisis, liquidity crisis. There was no liquidity crisis. Like we always say, for every seller, there's a buyer. So there's no liquidity crisis. The liquidity crisis would pretty much be if there's a bank run or like the Silicon Valley Bank situation that we had last year. Now, none of that was happening. We were just in for a large amount of uncertainty, which I think no one was ready for. So, cut to the chase on April 8th, April 9th, he comes out and says, what a great day, big news, America's going to do well. 2 to 3 hours later, 90-day pause on all countries except China, and a flat baseline of 10%. And the world carries on. You saw the biggest move, I think, in history of the S&P 500, and the NASDAQ stocks were up about 20%. So here's what we're trying to explain to you guys. If you panic sell and you wait to say, let the dust settle down and then I'll buy in, there is no dust settling down. When the dust settles down, it's new highs. You cannot buy expecting, let the stories calm down, let everything get back to normal. Maybe if China and America get to a 20% tariff rate, everything's going to be great.
Yeah,
When
that
that
is bottom, right?
Yeah, but when you go in and think that, oh my God, let me wait for the bottom is always created on the worst amount of panic. It's never created on the top would get created, or you would have a intermediate drop or a medium term top on great news, or at least when sentiment turns. We had washed out sentiment. Like even dogs on the road knew that we were in a bear market. That's how bad it was. Right. There is no way that you're going to start believing that, oh my God, we're going to be turning on the news that there's a 125 and a 245, and we're playing this chicken and egg game as to who increases more. Right. One of the first few things I remember when I spoke to Nikhil, one of the first few things that we realized was when the Chinese said we're not going to increase our tariff rates, and Americans said we're not going to increase our tariff rate because now it's reached a joke level. Because there's anyways no one going to be buying anything. So you pretty much had a rate beyond which people were not going to go. And I guess if they're not going to go above that rate, the worst is in. How worse can it get? And what do we see after that? Pretty much we're almost April 2nd, we're entering May 2nd, right? A month later, the S&P 500 is close to 1% or less than 1% higher than what it was on April 2nd. So there's literally no point in panic selling. So the Trump tariffs are not what you think it is. Plain and simple. What is happening today is we're exempting tariffs from tariffs. Now let me explain that. You had auto tariffs on Canada and Mexico. We're going back on them. We had reciprocal tariffs and all the other tariffs that were there of 100%, 50%, 40% on Vietnam, all of that. They're all back down to 10. We're exempting tariffs from tariffs. Donald Trump is going to save us from his tariffs and he's going to take a victory lap for. There is nothing fundamentally different about the current market scenario. Could we enter a recession? That's a story for another day. I think we should be making another video about that. Sorry, because if this shit show goes on for another month and a half, 2 months, in terms of China and America not reducing their tariff rates, let's be honest here, India, Vietnam, Malaysia, Japan, Europe, we're not going to be able to live with these rates if these two big guys decide to be at 125, 145. What do you think about that, Nikhil?
And look, if so, so here's the thing, right? So a lot of people basically priced in, things way ahead of time, right? So the market was essentially priced on April 2nd based on the assumption that these tariffs will be here for perpetuity for the rest of the financial year. But that's not what happened. There was a 90-day pause. And historically, the administration has shown that when the market really, really pushes back, they do sort of take a few steps back. And that's sort of what we're betting on again.
You're right. And one of the things is there was a lot of retail sales data and a lot of the other data which came out, which pretty much said that there's a lot of front running that's happening. People are going and buying iPhones, people are going and buying cars. Yeah, that's true. I don't deny that. And a lot of people are doing that purely because you're in that scenario where you're currently being like, hey, you know what? Let me also figure out the case wherein if I'm buying so much, how am I ever going to be able to, justify the fact that those data and those numbers are not going to fall down? Point is, just because people bought an iPhone today or bought a car today, which they were anyways going to do 6, 9 months later, no one, this is my belief, no one was saying, I need to buy a car in 2028, but because of the tariffs, let me go out and buy it in 2025. No one saves up money for buying a car 3 years out today. Those that do, don't give a damn about tariffs. Right. Anyways, largely what we're trying to figure out here. So we're in close to consensus at the moment between the three of us. And hopefully the world agrees with us when they see this. Is that the bear market that everyone's screaming about, they're only going to stop screaming about it when we're closer to all-time highs. We're 8 to 10% away from an all-time high. Guys, that is not a bear market. Firstly, this stupid concept that, oh, we need a 20% and that's a bear market. What happens at 19.5? Why is that not a bear market? And what happens when we go down 21% and reverse everything in a month? Because that's what already happened. We didn't go down 27, 28%. We went 21% down, 20% down. Even if goddamn we went down 19%, what I can tell you is by sentiment, we were in bear markets. The way we crashed and the speed with which we crashed was a bear market. Plain and simple. The way people sold was bear markets. People were scared that globalization is going to come to an end. The dollar is going to completely come to an end. And everyone's going to cry about. So this whole new concept that came about American exceptionalism that's going to come to an end. You don't have companies the size of Meta, Amazon, Apple that are growing at those rates anywhere in the globe. So that's not happening. Yeah, sorry, Nikhil, you said.
No, I was just for adding in terms of as far as the wholesale America trade was concerned. So there was a lot of news and noise, especially coming from the media. A lot of fund managers came forward with the whole sell America trade, right, which is where essentially equities fall, yields rise, dollar also falls, which sort of what happened in 2008. I think the the only issue with just looking at one quarter of negative GDP growth is that also happened in 2022. I think when the Fed started hiking rates, you had one quarter of negative GDP purely because interest rates rose. So a lot of sentiment-driven, capex adjustment took place. A lot of sentiment-driven earnings revision took place, and then everyone screamed recession, but we never really saw it.
Yeah, that's true. I mean, that was I think I remember seeing this by Ed Yardeni, who clearly came out and said from Yardeni research that it was the most anticipated recession that we never had. Right? Every analyst, every investment banking house, everyone came out and said, recession tomorrow morning. It's coming. Are you guys ready for it? or we're all going to be broke. We're going to be begging on the streets. That's how bad it's going to be. You know what happened? Every time they came out and cut their S&P targets, every time they came out and said recession, market just went up. And they were literally all caught not knowing what to do when they raised their S&P 500 targets for 2025. And now they've all cut their S&P 500 targets for 2025 just because of what happened in April. And I don't deny that. See, these guys need to talk their book. These guys need to make money. There's career risk involved for every analyst out there. If they don't stick to consensus and they're wrong, they're done. Right? Mike Wilson at Morgan Stanley, the biggest goddamn bear that I could have ever seen from 2022 to 2025, kept screaming, it's a bad time, it's going to fall, it's going to fall. He's like the Ray Dalio of the hedge fund world. Right? He's been screaming that we're going to be in this perpetual bear market. I don't know what, 10 years, 15 years since I've been watching his videos. He is by far maybe a goat when it comes to hedge funds. But let's be honest here. If I call out today and say, hey, you know what, for the next 15 years, every year I come out and say there's going to be a bear market, there's going to be a bear market, there's going to be a bear market. And when it does come, it's like goddamn crying out of wolves. Someday or the other, it's going to come and I'm going to be like, see, I told you in 2010, I've been saying this, but it happened in 2026 or 2025. So, anyways, I mean, coming back to the larger story, we have a few charts. What we're trying to show you here with the first chart that's available is monthly payroll growth. I think yesterday we had non-farm payrolls that came out, blew past expectations. The expectations for anywhere, I think the whisper number on Wall Street was 120K. So they were already expecting bad numbers. We blew 177. Keep in mind, the revision of the previous month dropped from 200 plus to 180. So we dropped about 40,000 in the previous month. But still, considering all the uncertainty in the world, considering all this nonsense about everybody saying Doge is, we're going to have a negative jobs in. We had 177,000 jobs created. That's not small by any number, and that's not recessionary numbers. Could we enter a recession 2 to 4 months from now? Surely could. Who the hell knows? But my bets are clearly off that table because I have barely seen a recession with payrolls growing and oil not increasing. Oil's at its 4-year lows. I think Sean and me were talking about that oil was below $60 a barrel. If oil is below $60 a barrel, you're pretty much going to be less than $2 a barrel at the pump. That's discretionary money extra that you have that you can spend on, I don't know, a lot of things. How is that recession with oil being lower?
I think they were just concerned about the price, the hike, the tariff hike that was very, very high. And even the China thing where it went up, what, 150, 200%?
Yeah.
And
I mean,
then,
I think the Chinese stopped at 125% because they said that now,
yeah, but
guys, it's a joke.
now it's what, 2 weeks later, they came out and said, oh, we're cutting tariffs on certain things. So, like,
Yeah.
it's all
So
coming back
it's slowly
to,
happening. But that's what I'm saying. These are situations where the dust is settling. But you know what's happening when you're buying when the dust is settling? It's higher than what it was on April 2nd. If you wait for the dust to settle, you're going to be at all-time highs. You have to buy in panic. There's a reason the goat of Wall Street lives in Omaha and says buy when there's blood on the streets. And that blood on the streets was April 2nd to April 9th. Those were the days when you had to go out and buy. So, but let me not take this away from anybody by saying, hey, you know what? When you see your portfolio down 40%, it's easy to talk on a YouTube video, right? We, to some extent, did pull out a lot of our money in March. And let's be honest, neither of us expected it to be this bad by April 8th, April 9th. But if it is that bad, we go in and buy. Because if there is a recession and it does actually get into that, it's not happening tomorrow morning. It is going to take time. So you can always wait it out. It's not something that's going to, pretty much kill you. Talking about the payroll data, right? I mean, look at that 3-month average. Look at the 6-month average. Look at the 1-month change. The 1-month change. You are seeing jobs grow. It is close to impossible to see that happen and move up. GDP is negative 0.4. Maybe we'll have a big rebound if in Q2. Who knows? But you're going to get that number 2.5, 3 months later from now. What are you going to do for all that period? Wait for the dust to settle? Like we're saying, Trump tariffs are not what you're supposed to be spending your time on. Get out of X, get out of Facebook. Just look at the news. All the news is turning bullish. It is not bearish. Uncertainty is reducing. You buy when uncertainty is high, you continue buying while uncertainty reduces, so that when there's more and more certainty, your portfolio is in the green. That's the game, right? It's pretty simple. Anyways, let me try going over a few charts here so we're in the same number. Now, look at that. That's one of the things that I keep. It's just fascinating when I look at that monthly payroll growth, less government education and health services. It's as good as the previous month.
In fact, some of it is a lot higher than 2023.
Yes. So I don't know. Look at that year over year private sector job growth. Ex education and health services as a share of total payroll growth, whatever the hell that means. But look at it.
Also to just gives like a viewer some perspective. While if you look at the chart from 2022 through 2024, even the previous chart, while it may look like it's declining, it's also important to understand that a lot of those jobs were essentially jobs which came back after the COVID layoffs.
Yeah,
Once there was a
that's
lot
true.
of liquidity in the system, so there was an
That's true.
excessive number. So a lot of that payroll growth was already factored in. Because if you look at an unemployment rate isn't as high as people expected it to be. So while it may look like it's slowing down from 2022, we also have to factor in that the jobs lost and then regained and added post COVID.
Yeah, I think we have a chart for, I don't think we have it for COVID, but this is something that's beautiful to talk about because this is Bespoke that came out with a tweet, and these guys are pretty absolutely amazing when it comes to that. It clearly shows what we've been saying in the first few 10 minutes of this video, right? It's not often that S&P closes positive for the day after being down as much as 2% intraday. We were down 2% intraday on the advanced GDP numbers and the horrible ADP numbers, right? No one expected it. It was worse than we could have imagined. And I would be guessing a lot of people on Wall Street expected a negative non-farm payroll number, just looking at the 68,000 on the ADP employment numbers, right? So people were pleasantly shocked when it came to 178,000. That's, what is it, almost about 3 times as much as, or maybe like 2.75 to 3 times as much as ADP numbers were. So there's something that I saw the other day on Twitter, which is pretty fascinating, which said that if the ADP numbers are bad, and the non-farm payroll numbers are usually great. And if the non-farm payroll numbers are bad, the ADP numbers are usually great. And that's been working for the past few months. So that's, anyways, I mean, I don't really think a lot of people even go back on these surveys. And from one of the things that I realized is there's a chart which shows that, I don't know, maybe 10 years back or something like that, 60 to 70% of the survey respondents, and now we're dropping to 40% because a lot of people are not responding. So I don't know how strong this data is when it comes to non-farm payrolls and all of ADP numbers, but there's something that we say at Signal and Sentiment, which is that we trade the markets we have and not the markets we want. So that's important. We look at where we are today and where we're going to be from now, and then go ahead. There's no point in looking, what if this happens? What if that happens? That's okay. That's strategy. We do that. But where we are today and how does it look when it comes to the internals? Because some of these things really matter, right? Let me show you another chart that I have here. This is something that I remember Nikhil and me were talking about as well. I think even Sean and me had a separate chat about this. This is the S&P 500 cumulative advanced decline line. You're looking at October 2024 all the way up to 25th of April. You're looking at that horizontal line there, seeing we're breaking out an advancing declining ratio. Number of advances on the S&P 500 are now higher than what they were in October 2024. Explain to me. You can write it down in comments, you can email us. But explain to me, how is that possible if we're in a bear market or we're entering one when the number of advancing stocks are higher than the number of declining stocks 6 months back? Because I can tell you one thing, 6 months back, if we were having this discussion about maybe a recession's incoming, none of us were talking about the fact, clearly at that moment, none of us were talking about the fact that a recession is going to be coming and we're going to have this massive drop. So no one really knows. But let's be honest, this internal data matters. And what we're saying here is that a lot of this is noise. And that's why you need to know what is signal from noise. That's how you're going to know if the advancing stocks are higher than the declining stocks compared to what we were when we were in a bull market, as people say. How is it that we're in a bear market today? That's the S&P 500. There is nothing more of a barometer of the American stock market than the S&P 500. And if they're making new highs on advances, it is very likely we're going to be making all-time highs on the S&P 500 in less than 6 months. Don't hold me to it. But I am looking like, at least I believe that's going to happen. I'm not sure about both of you. If you guys have your views, you can go ahead and let me know. But I think we're going in for a wild ride upwards.
Yeah, I mean, even if not all-time highs, it should at least go back to where it was. Mm, because interestingly enough, because none of us really expected the markets to close like they did on Friday. So
True. True.
that was interesting.
Yeah. And one of the things that I did see, I remember, I think, Sean, you were telling me about it when it came to Meta's earnings. The digital ad spending is picking up. Look at Reddit's numbers. Yes, the stock did go down 4%, but that's because they said in one of their statements that, maybe Google's dynamics and all of that might change the way their earnings are. Their numbers are coming out of their ass. That's how great it is. It's flying. You're expecting 360, 380 million. They're coming 400 plus million. Number of active users growing. Reddit makes all its money through advertising, right? There's no verified tick there. They're not making that kind of money. But anyways, what were you saying, Sean? Sorry.
No, I mean, Reddit is doing what, 70%? They grew revenues.
I'm not sure if they grew 70%. I knew they grew. They were I think 50% year on year is the revenue growth. I mean, I think we should make a separate video on just digital advertisement growth that's been happening.
Yeah, but even when our data came out, the markets didn't crack, but it was just stable and then it went up. And I was like, oh, what's happening? Like I don't think people are worried a lot now because they're like, okay, people are coming to the table and talking about tariffs. So there's not really nothing to be worried about. Like when he came out the first time, and it's a tariff on everyone. So I think people are just starting to realize that maybe there's nothing to it. It'll just be normalized, essentially.
Just to go back to that S&P advanced decline line, if you actually look at some of the
Let me put up the chart for you.
so
Yeah,
if you
go ahead, but
actually we wait for that chart, but like essentially,
yeah,
if
there
you
you go.
look at some of the large cap tech stocks, sure, some of your high beta stocks might have bounced around in the same range bound volatility type of a movement. But if you look at the large cap tech stock, that's Meta, Alphabet, Microsoft, all of them gained up and they're holding their gains, right? So if
Netflix
the
at all
wallet
time.
and yeah, I mean they're actually holding their prices, which is very surprising to me.
Yeah, and
So
I mean, if what you're saying is absolutely right, because if you look at Netflix and Spotify, they're, I mean, they're just been growing like it's not no tomorrow. And even under a recessionary scenario, it's very unlikely for me. Even if people leave their jobs, I'm pretty sure they're going to go back home and watch Netflix. Everyone needs
they'll
music.
probably watch more of Netflix.
Exactly. So, I mean, that's why you had a $900 stock go to 1155, right? I mean, Spotify, they said they had that banger of an earnings. All they screwed up, at least from Wall Street's point of view, was they didn't meet next quarter's estimates. All right. And you know what, to some extent, I've been thinking about this. Maybe you guys can tell me some of your thoughts on this. But what I've been thinking about is it's easy for companies right now to put the blame on the administration and reduce their guidance. So they underpromise and then overdeliver in Q2 because they can always say, oh my God, uncertainty, all of this, that, Trump administration, you know, all of that. It's easy at this moment. You don't need it to be a company specific problem because you have a problem in the White House that's causing enough problems, right? I mean, this channel is purely non apolitical. I mean, none of us are here pretty much saying we're Republican, we're a Democrat, any of that. That's separate. What we're saying at the end of the day is, like we say, we trade the markets we have. The guy in the White House decides, we react. You would pretty much get 1.5 to 2 times the S&P 500 returns every year if you just invert the sentiment. You don't really need to do anything out of the ordinary. I mean, I'm pretty sure you guys agree with me on that.
I mean, I think what's happened is I think we're experiencing like the big short effect ever since that movie came
True.
out. Everybody has like a Michael Burry moment because they think they caught the distress credit moment. But yeah, it probably comes when we least expect
What you're
it.
saying
If
is, in the next video, we're going to add in another chart. I have another chart for the credit spreads. They are not even higher than they were when Silicon Valley Bank and the August crisis happened. The yen carried risk. If
22
you were
was a
heading into a recession, if you were heading into a recession, you would see credit spreads skyrocket. And that's not happening. That's signal. That's quantitative data that you look at that makes you make decisions. Yes, you do react to sentiment. So every negative sentiment, you react positively to. Every positive sentiment, you start questioning, can this continue? And remember, on an average, bull markets last for longer than you and I can imagine. And bear markets last way shorter than you and I imagine. Average bear market is 9 months. And in the past, I would say this is something that I've been seeing with all the Reddit crowd, with all of the DGen crowd, with all of these meme stock guys. The BTFD, where you're buying the fucking dip, is pretty common. And now everyone's out there thinking every time you get a 10% correction, you just buy. Because most of us have not been through a 2008 crisis. None of us have seen a massive recession other than a 2-month recession during COVID, wherein again we were just flush with money because you were asked to sit at home, listen to music, watch shows, and get paid. So that's exactly what happened. I mean, let me show you one of these charts that Warren Price of 314 Research put out. And it's a beautiful chart to just show exactly what we're saying. To some extent, it is just quite self-explanatory. If you look at this, what you're looking at and what it says is 26% of the fall in post-liberation day forward EPS is attributable to the energy sector. If you strip out energy, forward EPS is down less than 1%. How is that a recessionary path? So let me just make it easy for you guys on the chart. What he's trying to say is that if you see the blue teal color line that heads lower, you're looking at EPS around corrections that become recession. So whenever you get into a recession, EPS is going to contract and you're going to fall off a cliff, right? The purple line that you see heading up is when you're without recessions. So they keep heading back up, right? There's no fall in it. Currently, what we've not seen EPS recessions, EPS prices come lower and lower. You're not seeing earnings per share collapse. You're actually seeing them stabilize. And I think we're pretty much through about 25 to 40% of the big S&P 500 companies that have come out with their earnings. I think by the end of this, we might just have more positive EPS numbers than negative EPS. So what happens in a scenario when this turns back to the upside, but people are not ready to believe, right? That's something that I think Sean and me were talking about, where by the time people believe that, oh my God, everything is great, you're going to see 6,000. You're not going to be at 4,860 because that's not going to happen. That's not how markets work, right? It's just, I think Sean and me were talking about that last time. But anyways, I think we have a few more charts because we don't want to keep this going on for like too long. But let me just get to those charts. But I think Nikhil and me, I think you had a conversation with me on April 8th, I think, when I was in the Middle East, and then you told me that, let's get on a call because we need to talk about this fact that Trump tweeted. And I think the previous day, Walter on Twitter also came out with the tweet saying it's a 90-day pause, and then it
Walter
didn't turn out
Bloomberg.
to be a 90 day. Yeah, it didn't turn out to be a 90-day pause, but then the next day, you got a 90-day pause. I don't know. I mean, sometimes it's just funny what happens.
I
But
mean,
yeah, so
like I said,
yeah, sorry.
if not anything, at least one consolation is that at some point of time, whether it's treasury yields or the broader market, when it does push back hard enough, it looks like they're responding. And that's basically what we're looking for. If they continue to do that, hopefully they'll do that before the deadline of 4th of July.
Yeah, I don't know if it's ironic, but I don't know. We end up somewhere there towards the Independence Day, right when when the 90-day pause comes into effect. Now, do I really believe that Donald Trump's going to come out and make a speech saying, "Oh my God, we're going to make America independent and not have trade with all these countries, and let's not have all of these"? I mean, we all know that the India and American trade deal is pretty much done and dusted. All they're waiting for is the approval back in India from the parliament. That's about it. It's done. Howard Lutnick already came out on CNBC, said he has one completely done. The Japanese are going to come in. The South Koreans are going to come in. The Taiwanese are going to come in. So eventually the Chinese also. And from what I've been reading in the past few days, maybe a week, is everyone's posturing as a tiger. But at the back end, they're all reducing their tariffs slowly on small products. Like today, I read an article, but the Chinese are now ready to work on fentanyl in order to start having talks about America. Because let's be honest, I think, Sean, you told me, right? Some of the factories in China were shutting down pretty much.
Yeah. Once the tariffs, 125, 125, people were going on TikTok and all, and they were just crying, saying this is what the US people are doing. We have massive factories just shutting down because they're like, what's the point? Because people have been canceling orders. Or people just said, if I've paid half for the product, you can just keep it with you, and we'll see you later. I mean, it's just gone down, but I think right now because China's going on and saying, "Oh, we can take it." Like those Chinese propagandists have been coming out on Twitter and saying we'll endure for 5,000 years more. I mean, but they're feeling the pinch right now, right?
Yes, 5,000.
Yeah, because
I
money
mean, that's
matters
there.
today.
Yeah, that's true. But yeah, one of the other things I think Nikhil, Sean, and me, both the three of us were speaking was the Chinese do think in hundreds of years, while the Americans currently are thinking in for the next midterm elections. Because that's important. Let's be honest here, guys. Anecdotal data. Every time you have a midterm election, the quarter that you have the election and the 2 quarters after that, they are globally the best stock market returns in quarters ever. So October, November, December of midterms next year and the 2 quarters after that, you're going to skyrocket. And if he continues on this path, he's not winning more votes. So what are you guys talking about? He needs votes. He needs the House and Senate. He's going to bloody well lose it if he continues on this path. Understand that. If you understand that, you're not selling stocks, you're buying stocks. There's no reason to panic, sir. Right? Let me just show the last chart that we have, and then we can all be out of here. But this is beautiful. This is what I've been saying since a while now. Now, if you guys, let me show you this chart. What you're looking at there, the blue line is a 2024, 2025, 4-week gasoline demand. And the yellow line that you see there, whatever is that orange, is that yellow? I don't know. But that's
It's
2023,
orange.
2024. It's orange, okay. What you're seeing is the gasoline demand's picked up. Yes, to a large extent, it's picking up right now is purely because the gasoline prices are lower. I think in some states we're below $2 also. I think at the pump we saw it at $1.98. Now, if you're looking at those prices, people have more discretionary income. Gasoline demand, as well as people spending more. Maybe the Canadians are not coming to America on a holiday, but if the Americans are traveling more in America, you're still going to see GDP grow. You're still going to see things happen. Right? You might see 2 quarters of negative GDP growth, and then the NBR and all of them will come out and say, "Oh my God, we're in a recession. We're in a recession." Buy the dip. If the dip is too large, try buying more. If you can, do not panic. Don't wait for the dust to settle. Wait for a bright sunny day to buy. That's 7,000 on the S&P. If not 7,000, it's 6,500 on the S&P. You have to buy on bad news. I know it's painful. I mean, it was painful for us when the markets fell as well. I'm pretty sure about that. We took a big hit as well. But if you wait it out, let me tell you one thing. From April 2nd to May 2nd, you pretty much had all the bad news you could hear and then slowly trickled in with good news, right? The worst news in the first week, and then all the way for the next 3.5, 4 weeks, better news, less uncertainty, right? But they were not taken away. Were the tariffs completely taken away? No. But was all of the loss taken away by the S&P 500? Yes. That's what we're trying to say. If you wait for the dust to settle, you're gone. You're not going to make anything. Because then you're going to come in and buy at 6,200, 6,500 the S&P and get single-digit returns. And then you're going to be like, oh my God, I'm not getting the returns I expected. You got to buy. Volatility is a gift. Use it. If you don't, somebody else is. What do you think
So
about that, Nick?
Q1, yeah. So speaking of volatility, Q1, if you look at all the major banks, U.S. banks results, whether it's Goldman, a lot of their money did not come from your traditional IB sources, right? A lot of it came
A lot of it
from
came from trading. Yeah, right.
profiting off volatility. Yeah, the amount of money they made on trading revenue, right? They played the volatility, and sure, what they say in public is very different than what they do on their actual book, right? Yeah, there's that. And the other
So,
thing that I was just thinking about was,
was it you that told me, or was it Sean that told me that Interactive Brokers and Robinhood also made a lot of money through trading? I mean, primarily
yeah,
that's
so
what they.
IBKR, I think the founder of IBKR, I think he did an interview on Bloomberg or CNBC, I don't remember, but I remember the video where he when he was questioned, is this a tough quarter? Because usually brokerages fall when trading volume falls. But he was like, no, there was actually a lot of trading volume. They made a good amount of money. Q1 was pretty interesting for IBKR. The other
I think he
interesting
was
thing
also
is,
sorry. I think he was also asked about the fact, saying, "Do you think the low is in?" And he's like, "Yes, the low is in."
yeah, and he's a sharp guy, man. I mean, he's
But
been
yeah,
around
I
for a
mean,
while.
yeah, he stays right next to Donald Trump, is from what I know.
The other thing
Yeah, he
is,
lives
if
pretty
look,
close by.
if this whole sell America trade is real, I don't think Buffett would be going out there and buying treasuries right now. If the sell America trade is real, then yields should go up even more.
True, and he's been the biggest proponent of American exceptionalism, American treasury markets. I don't know. Maybe I think what was it? Sean, did I send it to you when I told you that 5% of American treasury
Yeah,
is being bought by Berkshire Hathaway?
not bad.
I mean, they got $300 billion in cash, right? I mean, he is the lender of the last resort. So all we do is take nuggets from him and try helping you guys by giving it to you guys. Just make sure that you're able to figure out what is noise, what is signal, invest wisely, and hopefully we can try helping you guys make some more money in the next few videos and ahead. So guys, I think we kill it for now. Let's
Yeah,
see.
we'll wrap it up.
Yeah, we could then
Awesome.
put in maybe a few more charts. I think next week, what do we have for next week? I think today, from tonight, we have Buffett. So we can maybe get a Berkshire
We have
Hathaway
the
meeting interview
yeah
come out, and then we could also get in maybe Powell. Because that's going to be a
yeah.
fascinating
So
speech if you honestly think about it. Because he's got inflation down to 0.0 on a change basis, and he's also got a very good jobs number. At the same time, he's got someone sniffing around pretty much telling him, you got to lower rates, Mr. Too late. But let's see. That should be fun. Anyways, guys, take care of yourselves. Have a good weekend.